Here are insights into the three areas you're interested in: the impact of new regulations, specific altcoin sectors poised for growth, and the current technical picture for the market in 2026. Impact of regulation. The 2026 rulebook takes effect. 2026 is the year major regulations move from paper to practice, with the US taking a lead role. This clarity is a foundational shift for the entire crypto market, directly influencing which sectors and assets can grow. The US sets the tone with two key laws. The Clarity Act. This law resolves the long-standing debate between the SEC and CFTC by creating a clear path for digital assets to be traded as commodities, not securities, once a blockchain is deemed mature. This legal clarity is unlocking institutional investment into altcoins and is seen as a prerequisite for major assets like Ethereum and Solana to reach new highs. The Genius Act. This establishes the federal framework for US dollar stablecoins, classifying them as payment instruments and setting strict rules for reserves and issuance. This is accelerating the use of stablecoins for corporate payments and settlements, with major banks like JP Morgan expanding their offerings. Global harmonization. Europe's MiCA framework is fully in force, and major financial hubs like Hong Kong and Japan are implementing their own clear rules. This global regulatory alignment is giving institutions the confidence to participate on a larger scale. Overall impact, regulation is no longer just a risk to manage. In 2026, it's a catalyst for adoption, particularly for institutional-grade products, stablecoins, and assets within clear regulatory perimeters. Specific altcoin sectors with structural growth. Capital is flowing into sectors with clear, real-world utility and institutional backing. Broad-based altcoin seasons are less likely. Instead, selective growth in high-quality sectors is the theme. Tokenization of real-world assets, RWAs. This is a leading narrative for 2026. The sector has grown from $1.5 billion in 2020 to over $36 billion in 2025, with predictions pointing toward a multi-trillion-dollar opportunity. Key player example? Ondo Finance, ONDO, is a leader here, offering tokenized versions of US treasuries and equities. It's building a custom blockchain to meet institutional compliance needs. Decentralized infrastructure and oracles. This sector provides the essential plumbing for blockchains to interact with real-world data and each other. Key player example. Chainlink, LINK, dominates the space. Its cross-chain interoperability protocol, CCIP, is being integrated by institutions like SWIFT to connect to over 70 blockchains, and it is crucial for the growing RWA sector. Artificial intelligence, AI, and decentralized compute. AI-related crypto projects saw significant traction entering 2026, driven by speculative and fundamental demand in a risk-on environment. Key player example. Render, RENDER, is a top-performing token in this category, providing a decentralized network for GPU rendering power. Decentralized finance leaders. As DeFi matures, blue-chip protocols with deep liquidity and strong governance are separating from the pack. Key player example, Uniswap, UNI, the leading decentralized exchange, recently executed a major governance upgrade, burning a large portion of its treasury and tying its tokens value directly to protocol fees, making it deflationary. Deeper technical and market structure analysis. The technical landscape confirms a market in transition from speculation to a more structured asset class. Dominance and capital rotation. Bitcoin's role. While Bitcoin dominance remains high, hovering around 58 to 59%, its correlation with stocks is expected to fall, and it is increasingly behaving like a digital gold, a macro asset, rather than a speculative trade. This provides a stable base for the broader market. Altcoin opportunity. Analysts note that despite high Bitcoin dominance, altcoin trading volumes are surging even as prices consolidate. This volume paradox can signal institutional accumulation and often precedes a rotation of capital from Bitcoin into altcoins. Key technical breaks in Bitcoin dominance charts are being watched as potential triggers for this shift. Evolving market structure. Institutionalization. The launch of numerous new spot ETFs for assets like Solana, Cardano, and Avalanche is a major structural change, providing easy institutional and retail access. These ETFs are purchasing more than 100% of the new supply of some major assets, directly impacting price dynamics. Liquidity and risk. The market is concentrating on fewer, more regulated venues. The key challenge for 2026 is whether this new infrastructure can handle volatility without the liquidity crises seen in past years, as institutional capital demands stability. Key trends to monitor in 2026. To navigate this complex landscape, keep an eye on these interconnected trends. Regulatory implementation. Watch for the final rules and licenses issued under the Genius and Clarity Acts, as they will dictate the pace of institutional product launches. ETF flow data. Monitor weekly inflows and outflows into Bitcoin, Ethereum, and new altcoin ETFs. Sustained inflows into altcoin ETFs would be a strong signal of a sustained rotation. Stablecoin supply growth. An expanding aggregate stablecoin supply is a leading indicator of liquidity entering the crypto ecosystem and supports bullish trends across all assets. On-chain metrics for altcoins. For sectors like RWAs and DeFi, track total value locked, TVL, and protocol revenue. In 2026, fundamentals and real usage are becoming key differentiators.